Cryptocurrency firms applaud CySEC regulation, but obstacles remain. Malta and Gibraltar were the first jurisdictions to enact crypto-specific legislation. After more than a decade and multiple unicorns, the majority of the cryptocurrency business is still looking for a friendly jurisdiction in which they can be recognized and function as crypto service providers, but this is changing. Numerous smaller jurisdictions have introduced crypto-specific rules in recent years, recognizing the enterprises operating in the field as crypto service providers. Cyprus, a popular base for Europe-bound financial services companies, is the most recent jurisdiction to make a policy statement on crypto firm registration and authorization. The Cyprus Securities and Exchange Commission, CySEC, will recognize cryptocurrency enterprises as crypto service providers under the new framework. It is encouraging news that CySEC has begun investigating the possibility of regulating cryptocurrencies, since this could result in more companies falling under their umbrella, Natalia Zakharova, FX Open's head of sales, told finance magnates. As a result, we believe it will have a beneficial effect on the industry. Other industry leaders agree, as Marie Tataboué, CMO of Gate.io stated, this is a very positive approach. She noted that many crypto companies will now seek to establish a base in Cyprus due to regulatory uncertainties in other jurisdictions regarding cryptocurrencies. Accession to the EU. According to the newly implemented rules, the Cypriot regulator would classify cryptocurrency enterprises according to their business structure. Additionally, the laws will adhere to the European Union's AMLD5 requirements. One of the most essential parts of the CySEC laws is the inclusion of crypto-asset enterprises within the scope of EU anti-money laundering legislation through the modified AMLD5 law in Cyprus, Tataboué noted. For the first time, this regulation subjected cryptocurrency exchanges and custodians to EU anti-money laundering rules. This, I believe, is a crypto-friendly step because it is a necessary step towards company legitimacy. CySEC is referred to provide the financial services industry's portal to the European Union. It is home to dozens of brokers and other financial institutions that operate throughout the European Economic Area, EEA, by virtue of their Cyprus investment firm, CIF, license being passported. Our proactive involvement with crypto enterprises through the CySEC Innovation Hub, with the goal of assisting creative businesses and engaging with suppliers of developing financial technologies, stated Demetra Kalogeru, former CySEC chair. Several obstacles. Despite the numerous benefits, some standards may be too onerous for crypto enterprises. To begin, they must hire 4 local directors. Additionally, enterprises must pay €10,000 for permission under the new structure, as well as €5,000 in renewal fees. As Epiphanes founder and CEO, Hoan Shu, said, the new restrictions do not necessarily mean that crypto enterprises will begin flocking to the Mediterranean island. If the Cyprus government or its primary regulator, CySEC, drafts the legislation, it will include numerous strings attached, Shu explained. The majority of licenses in Cyprus, such as broker-dealer or VASP, require the hiring of up to 4 Cypriot directors. Additionally, the broker-dealer must employ an accountant, a legal representative, and a secretary to submit paperwork to CySEC. This equates to a total of 7 people before a business hires its own personnel. In comparison to other jurisdictions, the seed money required for a company seeking a license is also quite high in Cyprus. For instance, €750,000 is required as a cash component on the balance sheet of the business. Additionally, he stated that offshore locations such as Bermuda and the Cayman Islands provide significantly more favorable regulatory environments for crypto companies. Bermuda has its own regulated exchange, which has been open to eligible digital asset listings by the BMA, Bermuda Monetary Authority. Bermuda also offers a tiered registration structure for startup businesses with low capital requirements and a small footprint on the island, he noted. However, Cyprus membership in the European Union remains the most alluring criterion for luring crypto businesses. CySEC is not, however, the first financial authority in the European Union to introduce a crypto-specific framework. Gibraltar and Malta introduced similar legislation years ago, and despite initial enthusiasm, those regulations failed to attract many cryptocurrency startups. Cyprus' siren song is the EU passport for digital assets, Epiphany CEO stated. Both Malta and Gibraltar share the same EU status, but it is subject to change. France and Germany have truly paved the way. Both have established crypto-related banking and broker-dealer laws, to which the sector has responded. However, as the digital asset business grows, jurisdiction is not the most pressing issue. Rather than that, market transparency and oversight of traditional kingpins are also critical. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.